This is important. I call it a historical event for Tesla and Musk in terms of this new category, 4 years in the making. I mean, you got 2 million reservations. Even if 40% of those convert based on our estimates, 800,000. I mean, this is going to be a new growth vehicle, obviously on the edge, the Mad Max design. But I think this is going to be successful. And I think, look, people like Miller, they're going to be driving this
Yeah.
around New York.
Wow, Matt, I hope you're listening in to
Yes.
hear that
Well,
one.
he's not going to get his wife to sign up on this. He's got the Challenger with the Scat Pack. That's enough.
Well, we're gonna have to see if it can strap in a baby carriage in the back. So that would be the most important for him right now. Dan, tell us what so you think this is going to be successful. Tell us a little bit about some of the projections you've run and just how break down the numbers for us in terms of how this is going to play out for Tesla.
Look, the important thing today is about pricing because that's really the unknown. We think pricing is probably sweet spot 60 to 70K, and that's important. You'll also get tax credit there. At that level, at scale, 250,000 per year as we get into 2025 in terms of units. Now, coming out, this is going to be complex to build. It's all going to be built out of Austin. That's where the launch will be today. But this is important because it goes back to, something we've talked about on the show a lot is a refresh. It's just more categories. It's part of the halo effect. Contrast that GM Ford pulling back a little on EVs, yet Tesla Musk actually doubling down.
So I think Elon himself has even said, Dan, that this kind of thing is, I guess in his opinion, kind of a profitability disaster, production disaster. It's so hard. Can you make any money on this truck? Is there any profitability in this truck?
Yeah, Paul, first 12 to 18 months, no. I mean, they'll essentially lose money. It'll be cash flow negative. But as you get into 2025, it actually could be pretty significant in terms of the accretive level as it all plays out at scale. Now, at 50,000 units, we think that's probably max 2024, probably about 40,000 in terms of what they'll ultimately deliver. But this is all about the next 2 to 3 years. It's giving them their other growth vehicle. And I think this is really the start of just the next phase of the Tesla growth story. This is 4 years in the making in terms of today's launch.
Dan, tell us a little bit more about the competition that the Cybertruck is going to be stacked up against. I think, the Ford, F-Series, particularly the F-150, right? That's the best-selling truck in America, isn't it?
I drove the F-150 Lightning.
Yeah, so the electric one there, sure. And then you've got the Ram, the Chevy Silverado. I mean, how's the Cybertruck, you think, going to stack up against those?
Well, F-150, I mean, that's the target on the back. I mean, they're really trying to go for some sort of churn there. You look what Rivian's done, the success. Now, they've had a lot of difficulty in terms of building it out, but in terms of success from a demand perspective, you look at that opportunity, you look at what we're seeing coming out of GM. Look, this is really creating a new category, but it's part of the halo effect. And I think the difference today, 4 or 5 years ago, everyone kind of viewed it as, okay, Tesla, they're not going to be successful. Today, there's not an auto manufacturer executive around the world that won't be watching the event because you can no longer just say that it's not going to be relevant. It's actually the opposite in terms of they're leading in terms of really innovation technology.
Hey, Dan, when you speak with the folks at Tesla, when you also speak to the other auto manufacturers, what's the thinking today about maybe the ultimate demand curve for EVs over the next 5 years? It seems to have lost a little enthusiasm out there.
Yeah, I mean, look, I think it's no secret you've definitely seen a moderation. But I think the view among many in the industry is, okay, let's say it doesn't go to 50 to 60% penetration. Let's say it goes to 30, 40% penetration next 5, 6 years. That's $2 trillion in terms of the amount of ultimately opportunity out there in terms of electric vehicles. So you continue to see aggressive push toward this. I think the big thing is price discovery. You're not going to have 80, 90,000. You need to be in that sweet spot, 40 to 50K. And that's what we're seeing in terms of that price war that's played out, well known in terms of what's happening in China. It's really price discovery. But finally, we're seeing some sort of supply-demand equilibrium. But I don't really see a pulling back. GM Ford, that's essentially UAW that really forced that hand to pull back a little in terms of some spending.
So speaking of the economics of this is a tough time right now to be buying a car and to be, persuading consumers that this is the time to be getting really excited about that when you have auto loan rates as high as they are. I mean, certainly the holidays, big time to roll out a lot of incentives on price and maybe rates if you can. But what exactly is the pitch right now to, like, financially, that people might be getting excited about this?
Well, the big thing too is tax credits, and I'd expect some more tax credit incentives as we go into 24, from Biden administration, because that's a key point. If you go back historically, let's call it 70, 80,000. Now you're getting some of these EV vehicles, especially for Tesla, Y, and others, 35, 40,000 when it's all said and done. Here, you're going to have incentives, but no doubt, because what we've seen from a rising rate environment, that's been a huge headwind that does start to reverse in 24. That's why the comps get easier in 24. And I do believe we are still going into what I view as a golden age for electric vehicles. And I think that's why it's important today for this event pricing. It's really going to be a flex the muscles event for Musk and Tesla.
Dan, the stock Tesla's up 97% year to date, clawing its way back to its all-time high that had a couple years ago. You've been, I would argue, one of the biggest bulls on Tesla, on EVs in general, and then by extension, Elon Musk. How frustrating is it for you to see yesterday, for example, another situation where Elon Musk really comes into the news in not necessarily a good way on a company that's not even related to Tesla? How do you and investors kind of deal with the Elon Musk risk factor?
Yeah, it's part of that spider web. I mean, even what we saw over X, and obviously, he went to Israel in terms of the trip. And then if you look at the interview yesterday, I mean, clearly there's going to be no champagne dinner between Musk and Iger anytime soon. I do think relative to Tesla, it is a bit contained relative to any sort of like brand deterioration. But as we talked about, I mean, Musk is Musk. He's going to go to the beat of a different drum. That's why you have the loyalists, but then of course the haters as well. And that's just, I think it's more accepted to some extent from a Tesla perspective. But no doubt, it's a fine balance between from a brand issue or any sort of deterioration. Right now it's contained, but it's not what you want to see yesterday, ultimately, as a Tesla holder.